Most often people really try to complexify investment way too much. People trying to do day trading, technical analysis, options, weird option strategies, futures and warrants and shorting and all this stuff. And really, I've done that. I've been there, done that. I've been investing for 23 years now. Yeah, I feel like I'm getting a bit old. And I've done all those things, okay? And I only started to make money when I have simplified to the most extreme my investment strategies. And now I call this retard investing. I'm a retard investing. And look, I'm a hedge fund manager, okay? I have a hedge fund. And I manage my hedge fund like a retard, okay? Very simple investment strategies that beat 90% of the Wall Street fund managers who have very complex strategies. So how do I do it? You just, of course, you need to build a system first. Build a system that works. In my case, I have a system that includes some statistical arbitrage. Don't let these names like scare you. It's just basically, I try to identify sectors when they are correlated. And then when they break correlation, I invest in one of those sectors that broke correlation. And I share how to do this on my Henrique Wealth Academy, by the way, in my community. You can check the link in the description. And I have like courses on how to invest in stocks and a lot of stuff. But basically, I invest in sectors that are diverging. I invest with a certain level of leverage that is given to me by some formulas that I create that are derived from something called the Kelly criterion. And just stick to the strategy. And that's it. And I do, people, when I say that I have a quantitative fund, people are like, oh, is it like high frequency trading? It's like, no, it's just like once a week I place an order and that's it. I do a little bit of rebalancing. Of course, every day I'm looking at the markets. This is what I do in my daily life. But it's nothing complex. Really, to be a successful investor, you need to drop complexity, go back to first principles, specialize in one single product. I would say you should go to stocks because individual stocks, you can have a systematic approach to investing, while in commodities and crypto, it's very, very hard, close to impossible to know where is it going. But in stocks, you basically find your underpriced fighters, find stocks that basically they are growing revenue, they are growing income, they are growing the profits, they are growing margins, their ratios are improving, price to earnings ratio, or even better, price to cash flow. Price to cash flow is better than price to earnings because earnings, sometimes you have BS earnings. Price to cash flow doesn't lie. You add price to sales ratio, you add price to book ratio, you add these indicators, and if these indicators are improving, the price is going down, but the revenue is going up, the income is going up, it's a no-brainer. It's retarded not to invest here, okay? So at the moment, I see some companies in this situation. You have Microsoft, you have Amazon, you have Meta, what else? MasterCard. These stocks at the moment, they are underpriced. And why? Because people are trying to get too smart and they go and chase the shiny objects. Now they chase what? Micron, they chase Korean stock market, they chase the semiconductor industry, and they forget their basics. And really, you look at the Microsoft chart, you look at Microsoft from a value investing perspective, it's an absolute no-brainer. So I'm now looking at the chart here. P/E ratio, price to cash flow, price to sales, the forward P/E ratio, the enterprise value to EBITDA. This is at the lowest in like 10 years. It's like, what? Why? Unless you believe that Microsoft is going out of business, it's like, but I don't think Microsoft is going out of business, right? So basically, part of my retard strategy to invest is I find these underpriced fighters, right? Now I'm buying Microsoft. Then number two, of course, position sizing. I only invest like a small percentage. So if I potentially have 10 bad investments, I don't go belly up. I can have 10 bad investments and I'm still fine. So I call these the investor's Kelly. I explain everything in my community in the Henrique Wealth Academy, but basically, if I'm investing in a new stock, I invest maybe 2, 3, 4, 5% of my portfolio, of my net worth into it. And then after that, very simple. If the price continues dipping, I buy more. Because if Microsoft is good at 395, it's even better at 380, and it's even better at 360. And like, unless like the reasons that, you know, the product is no longer good, Microsoft is really a dying business, the management is crap, then you should stop buying the dip, okay? You should sell the stock. But honestly, the price goes down, many people put like stop loss. Stop loss is so retarded, really. And people put stop loss, then the stop loss is triggered, and you know who is buying when the stop loss is triggered? Hedge funds and quantitative funds. They are doing stop loss hunting. So they know very well where people put stop loss orders, and they do the so-called stop loss hunting. So they force the price to go down, they crash the price to go down to activate that stop loss, and then they buy. So if other big hedge funds are buying where you put the stop loss, maybe you should also be buying where you think the stop loss should be. So buy more, because if it is attractive at 395, it's even more attractive at 360. And then after that, just hold for the long term. So my average holding period at the moment is 22 months. So it's close to 2 years holding period. And this is how I make money. Look, last year, the return of my portfolio was 59%. 59, while the S&P 500 returned like 20 something, 23. And I double my money every 2 years on the stock market by investing in with these basic principles, you know. This is kind of a bit like Warren Buffett would invest, you know, Benjamin Graham, the writer of Intelligent Investor book. And it's not rocket science, just find those stocks that are underpriced. And there will always be underpriced stocks, because the stock market is like a pendulum. It's a pendulum that swings from optimism to pessimism. Stocks are always either underpriced or overpriced. And overpriced, they can be overpriced and continue to be overpriced and go up even more. But what I like to find is these underpriced stocks. And then they swing to overpriced, they swing back to underpriced, and you see these happening again and again. Microsoft, again, was underpriced in 2022. If you bought Microsoft, if you bought Meta, if you bought Amazon, if you bought like these stocks in 2022, you'll be doing very, very well. So this is basically what I do. And finally, market downturns are buying opportunities. So I always have some cash on the side, not much, some cash, and I buy the dip when there is market opportunity. So over the last few years, there was a few market opportunities, right? It was the 2022 market, bear market. Then you had the Trump tariffs last year. This year you had the Iran conflict. If you use each of these opportunities, just go shopping. There's so many good opportunities around this. And keep it simple. Simple investing. Retard maxing. I call this retard maxing in investing. Keep it simple. Look at the fundamentals. How are they doing? Is the company still a good company? Is the revenue and income going up? If the answer is yes to most of these questions, just buy it. Okay, guys, I talk about these and much more in my Henrique Wealth Academy. And I have there a stock market course, I have my leverage ETF course, and my trade alerts, which have like a win ratio of 77%, by using my retarded investing framework. I don't want you to just copy my trades. I want you to know how to catch the fish. And this is what I do in my community. Check the link in the description. And if you enjoyed this video, please give it a like and subscribe. And let me know in the comments, what do you think about these investment strategies? And how do you invest? What's your current investment strategy? I would love to learn more. All right, guys, I'll see you soon.